Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show, and I've got an exciting guest in Brien Lundin to talk to today. Brian's been a stalwart in the industry for many years. He does a fantastic job reporting on the industry and has a spectacular conference every year that's coming up in November. So I'm pleased to have Brian on the show today. Thanks for joining us, Brian.
Alan, great to be with you today. It's a wonderful day in the markets. Generally speaking, today not so much, but not so bad either.
Well, it's timely for a couple reasons, Brian. When I was before coming on to this show, I'm writing a report about how compelling the argument is
Hmm.
for gold, silver, and copper, especially in the companies, because I see that, with what's happening in the world with the debt situation
Yeah.
and the devastation of the purchasing power of the US dollar and other fiat currencies, I think we're going back to a gold standard.
Yep.
And the reason that I argue that we'll see 20,000 gold in the next 10 years is because not only do you have a perfect storm on the demand side for gold, but the supply side is also broken. And you look at major miners that are struggling to increase production and replace their old mines with new mines. Plus, there's not enough projects in development to replace those old mines with new mines. And the exploration success has been underfunded
Yeah.
exploration for decades. And I think that this creates a perfect storm for gold. So let's start out with gold. What is your thoughts on gold?
Well, Alan, first, let me congratulate you on your reports because I read them and they are absolutely in tune with what I believe. So they must be brilliant, right? And
Without a doubt.
great minds thinking alike, but I'm absolutely in tune with all of that. I do think that this cycle, that we are headed for
And
10,
by the
20.
way, Brian, before I let you go, not only are we seeing things the same way, but Ray Dalio,
Yeah.
Stanley Druckenmiller, Muhammad Al-Arian, Dr. Doom, Nouriel Rabini,
Yeah.
Paul Tudor Jones. The list is actually getting endless as far
Yeah.
as big, smart thinkers are towards gold. Sorry for interrupting you there.
Yeah, and you don't have to be a big smart thinker to believe it right now because it's so obvious. We are at the tail end, the end game, as I like to put it, of a cycle of ever easier money that began when Paul Volcker started lowering interest rates on the highs that he had brought them to kill off inflation. And over that 4.5 decade time frame, every time there was a recession, sometimes when there wasn't even a recession, the Fed responded to a slowdown in the economy by lowering rates. And it's just a stair-step pattern, lower and lower, that you can track very easily on the charts. And then in 2008, the interest rate policy wasn't enough, so they came out with quantitative easing and all this stuff. Then COVID happened, the next emergency, and quantitative easing and lowering interest rates to zero wasn't enough. They, instead of doing it over 4.5 years, they did it over 4 to 5 days, and so they did more and more. So this is a cycle that keeps repeating. The next crisis is going to be even more, and with every cycle, fiat currencies get expanded, really exploded in quantity and lose credibility. So the end game, where we are headed, whatever the timing may be, will be some sort of a reattachment to gold on some level, which will demand a gold price in the tens of thousands of dollars. Now, you and I know that a $20,000 gold price will solve the supply problems. I mean, you're going to have point 0.10
Maybe.
grams per ton open pit deposits being developed. Of course,
If you
mining
could permit,
costs,
if you could permit them and finance them.
yeah, and mining costs will explode as well. But all in all, it'll be a dramatic increase in the gold price that should far outstrip mining costs, et cetera, et cetera. And you and I, being so heavily positioned in this sector right now, are going to be sitting on a beach somewhere, lighting our cigars with with $100 bills, and and not really worrying about it anymore. But all that said, it's not, it's, you don't have to be that smart to look at the situation right now. And people think, okay, we're at $2,740 gold, wherever we are today. It's too late to make that move. Well, it's too late, not necessarily, but you may think it's too late from an investment standpoint. But if you look 4 or 5 years or more down the road, you know that the dollar or whatever your home currency is going to be purchasing a lot less. Its purchasing power is going to decline significantly, and gold over the long term protects against that. So you can lock in today's exchange rate, as it were, today's purchasing power of your currency by buying gold and just socking it away. So that I think is a fundamental factor that has Dalio and all these other people talking about the inevitability of yet far higher gold prices, and therefore you need a position for that, both as an insurance and as an investment.
You brought up some points there that I want to unpack a little bit, and it's part of what I'm writing about today.
Hmm.
And so you talked about this ever increasing situation with debt,
Yeah.
and that's been going on for a long time. I actually think that there is a straw that is about to break the camel's back, the
Hmm.
debt camel's back, Brian, which is you're now got to face the situation that the cost of servicing that debt is now only second to Social Security.
Yeah.
And if the Fed doesn't lower interest rates and the next president, whoever they are, does what they've done in the past, Trump was a massive spender. He almost beat Obama was the biggest in a two-term period, and Trump almost beat him in one term. And Biden and Harris are probably going to rival Trump in one term.
Yeah.
And so your two candidates are massive spenders. And if you keep the interest rates even a few points below where they are now, the straw keeps getting worse. The cost of servicing the debt gets to the point that it will be the biggest cost. It will consume more than anything of all the taxes revenue that comes in. So what was a can that could be kicked down the road for the last 40 years or so, with this cost of servicing the debt, the
Mm.
can it, it can't be kicked much further.
Yeah. And that's a situation, that cost of servicing the debt, that I've been talking about in Gold newsletter at least 6 years. And nobody was listening. And I was presenting the facts and talking about this. The trap that the Fed gets in when debt service gets so high, and they can't have rates at anything approaching normal levels. So this creates problems across the board. That's the real reason why Powell and company are searching for any excuse, the flimsiest excuses even, for lowering rates right now, because it's the federal cost of servicing the federal debt at 1.2 trillion, and it will go up to 1.6 on current trajectory, no matter what happens, virtually no matter what happens. And it's also the cost of corporate debt. You remember before they started lowering rates, before they started raising rates, uh, there was about 20% of the U.S. economy corporate economy was zombie companies that could barely make the debt service costs, the cost of servicing their debt in a zero interest rate environment. So they could barely afford to service that debt. Well, all of that debt's short term and it's resetting over the next year, next months. And
Now,
that's a tsunami yeah, he's literally now, that's a tsunami that's about to crash under the shores of the US and global economy. The Fed knows that. So they have to lower rates. So that's why they're setting about to do that. Now, the problem is the market knows they have to do that. The market sees that and and sees the inflation implications of another spike higher and is demanding a higher return on its treasuries. And the Fed is losing control of interest rates because the bond vigilantes are coming back. Now, this is something that's everybody's talking about right now, but at the time of my conference last fall, I was talking about it in my presentation, showing the chart of the correlation between gold, treasury rates, and the dollar. And treasury yields were rising at that time, but so was gold. The dollar index was rising at that time, and so was gold. Then, when treasury yields fell, gold still
which is, by
rose.
the way, is very unusual,
Very
to say the
unusual.
least.
And over the year, there's been about four periods of varying lengths where the correlation, the rolling 20-day correlation between gold, treasury yields, and the dollar index have all been positive, which is not the way it's supposed to work. And it's a sign of safe haven investing in that, you know, somewhat akin to Brent Johnson's milkshake theory.
And
Money
all
goes,
of those, by the way, all of those times resulted in a situation where gold kept on going.
oh, yeah, yeah. It's been all weather investment, no matter what, it's been rising. So, dollar is somewhat of a safe haven when people around the world, investors are worried about the future. But treasury yields typically fall in a safe haven investing scenario because people are buying treasuries and therefore driving rates lower. My argument is that sometimes treasury rates rising is a sign of safe haven investing because the investing public is worried about the return on treasuries being incommensurate with the risk ahead, and not just the return on their money, but the return of their money. And so they drive rates higher because treasury yields aren't compensating them enough for the risk that they perceive. That scenario, when the Fed actually loses control of rates, is not well explored or prognosticated by pundits today. We always talk about Fed policy and what's the Fed going to do on the premise that the Fed is actually in control and can move markets. What happens when the Fed doesn't lose control? I mean, can't control rates in the markets? That's a scary scenario. It really is. But throughout it all, gold stands strong is really the one asset class that is proven to protect against that kind of a future.
But we're there now. The
We
Fed,
are there now. Yeah,
since
that's the point.
they cut rates, the yield on the has gone up, which
Yeah,
means that there's a buyer's strike on the on the debt. And at the same time, the foreign buyers are selling. They're not just not buying, they're selling. And so you've got a buyer's strike, not enough buyers. And if the Fed wants to continue to lower interest rates for the reasons that we discussed about the cost for not just the federal government, the corporations, but the consumers, which they know they have to, this means that we're going to see the Fed get into the market. I say it's like the Mortimer brothers in Trading Places. They're going to have to buy in
yeah.
order to manipulate the yield curve to then be able to lower the interest rates.
Yeah, they have to right now. I mean, 50%, 50 basis point cut uh, did leave the market wondering what do they know, why. Uh, but I think it's pales in comparison to what they're going to have to do pretty soon to get this debt service cost situation under control if they can. And I don't really think they can, frankly.
And that's
They are going
quantitative
to
easing. They got to crank up their balance sheet again.
they are going to have to act with much more urgency in what the public perceives as a non-emergency environment. So
Due to
they
their own promotional nonsense. They're smoking
oh,
mirrors.
absolutely,
They're making the
absolutely.
case that it's a Goldilocks economy.
They create the problems that they then have to solve, and then their solutions create ever greater problems or additional problems. But yeah, they missed their moment to get rates lower before this kind of a debt service tsunami hits the economy, and so they're going to have to move with somewhat urgency. And more importantly, I think over the long term, because those 45 years of ever easier money encouraged the accumulation of just monstrously large debts. The situation now, that kind of a debt load, is that interest rates have to remain below the rate of inflation. We have to have negative real rates going forward as long as this monetary regime is in place. Because if your currency is not depreciating at a faster rate than you're paying interest on the debt, then the whole house of cards collapses. You're in that debt spiral, in other words, that even for
which
the issue of
which
the
by
world's reserve
extension
currency
makes you
matters.
wonder, Brian, if I'm going to borrow money from you and I pay you in a currency that is devaluing your purchasing power, what makes you want to buy my debt?
Yeah, exactly. You want to be a debtor, not a loaner. And that's the issue in an economy or an economy that requires much more rapid depreciation of the purchasing power.
So, this all speaks volumes about why investors need to, the Federal Reserve, the politicians, they can dither. They can do their nonsense. They can talk up Goldilocks and a strong labor market, but the consumer understands. The worker understands. They're paying more for everything. They haven't
Hmm.
beaten down inflation. It's still growing, even though it's growing at a not as rapid of a pace. It's still growing. After you've devalued your purchasing power by 20% in the last couple of years, after already for the last 50 years devaluing it by about 90%.
Yeah.
It's just I hope that investors are not listening to this nonsense.
Yeah, the GDP growth that we've seen so far, when it has grown, has been the result of dramatic government spending, fiscal efforts, welfare-oriented spending, entitlement spending. The biggest job gains in the U.S. economy have come from government and healthcare, uh, not not sectors where you're looking for value gained from spending. And so there is a great illusion there. So how do you keep those kinds of growth rates going? You have to spend ever more of depreciating dollars. So you have to keep deficits at 1.8 trillion or thereabouts where they are right now. And you have to keep that federal debt growing. And just as a side note, we have a $1.8 trillion deficit, but the federal debt grew by, I think, 2.3 trillion or so. There's about a half a trillion dollars in off balance sheet accounting that adds to the debt every year. Uh,
So in
so
reality, the deficit is closer to plus 2 trillion.
yeah,
And
2.2, 2.3 thereabouts.
I'm predicting the next president makes it 3 trillion plus, which gets us to 50 trillion in debt by the end of the next president's first or only term, I hope.
Yeah.
And now if you keep interest rates at where they are, you've got 2.5 trillion. This isn't complicated economics here, folks. This is simple math.
Yeah, I'm asked on occasion, well, what should Jerome Powell do? And I say, well, my advice is he should run. Just hit the road.
Adios, amigos.
Buy some canned goods, gold, silver, and ammunition, and find a cabin in the woods somewhere. He really is. I mean, I think he's the best of a sorry lot, frankly. But I would not want his job right now.
Well, and this goes back to something I've commented on that I don't think people have really paid attention to. When guys like Greenspan, Bernanke, they talk about that the US can never default on their debt because they have the printing press of the world reserve currency.
Yeah.
Now, as long as you keep the printing press of the world reserve currency, well, I guess maybe you can say that. But as you create the problem of the debt and now the world reserve currency is in jeopardy, I think that the gold has now become the second leading world reserve currency. And I think within 5 years, it's going to overtake the US dollar
The
as
numbers, yeah, the lines are headed to a convergence. I don't know when they will converge, but gold is the second largest holding of central bank reserves, surpassed the euro, and now it's just gold and the dollar. And the dollar is dropping, gold is rising.
against
It'll take an awful
Henderson.
lot of gold to close that gap, but that's the trend right now.
And it's like a snowball going down the mountain. How can it stop? The debt is so big, and the cost of servicing that debt, and every fiat currency is devaluing, including the US dollar, depreciating your purchasing power.
Yeah.
How can that snowball stop going down the mountain?
Yeah, everyone's definition of default and depreciation is different, but if you have a rapid enough depreciation, there's no fundamental difference between that and a default. When we look back at the Roman denarius and the collapse of Rome, we say that the currency basically defaulted because the rate of depreciation was on the order of 90% over 60 years, over a few periods, by the way. Well, in my presentations, I put up a chart of the Roman denarius and say, well, it can't happen here. And then I put a chart of the purchasing power of the dollar, and it's exactly, I mean, it is a perfect analog. And the reason why, I mean, the comparisons of the US at this point in history and the Roman Empire are so common as to be trite, but that doesn't comment on its accuracy. I mean, it is so perfect of an analogy, and we are working in lockstep or running in lockstep with the path that the Roman Empire took 2,000 years ago.
And so to be an empire such as the Roman Empire or the British Empire or the US Empire, you need a combination of a few things. You need to be able to spend money like it's going out of style. You need to
Yeah.
have the printing press, and you kind of need the military to back that up. And now
Mhm.
the servicing of the debt is higher than the cost of military, and the military is in decay.
Yeah. Yeah. And that's a situation that, fortunately for us, most of our adversaries around the world have been facing for the past 20, 30 years. So I think the U.S. military is still in fairly good shape, China being the big issue there going forward. But it is true, in ancient Rome, they overspent. People don't realize, or it's not commonly known, that Rome had a vast entitlement system, especially for its military. And and that was part of what crashed the Roman treasury. It was entitlement spending, military campaigns, bread and circuses, and some wild parties by Caligula and the like. But it was a sign of decay. Now, at the time, and not to get too much into the weeds, Cicero was one of the great Roman orator and politician, was one of the people that was calling for a balanced budget and a reform of the monetary system and everything else. And he was there as the empire transitioned from republic to dictatorship. And he didn't know when to keep his mouth shut. And he was, he lost his head over it, in other words. But it mirrors a lot of what we're seeing today. Again, there are a lot of history's doing a lot of rhyming these days.
Well, and I have written in the past, I'm only a messenger, don't shoot.
Hmm.
Because, like Cicero, you mentioned there, he was just the messenger trying to
Yeah.
create some reality. And, taking all of these things into consideration is why I think that the world has to go back to the gold standard. I think it was the devastation that allowed the going off of it, or the last vestiges of it in 1971, with Nixon changing the rules on convertibility. Um, that's when the debt spiral started.
Yeah.
The death spiral of debt, I call it, started. And, you look at Reagan, he came in with less than $1 trillion in debt, left with 3 trillion. All the presidents since then have done the same. George W. Bush tacked on what seemed astronomical 4 point some trillion. Then Obama came along and in 2 terms made George W. Bush look like a piker. Trump tried to make him look like a piker in Obama looked like a piker in 1 term, didn't
Mhm.
quite succeed. And now Biden and Harris are doing the same. And whoever wins is going to, I think it's a snowball. Like, so much of this is institutionalized that, how can they stop spending? And not that they want to, but it's so ingrained that
Ingrained, it's entrenched into it. Yeah, if you want these people, let's face it, couldn't hold a regular job. So their only job is remaining politically employed, and the only way to do that is to keep spending money. I'm asked by a lot of media and friends in the international community, Canada, UK, and around the world, who are worried and think that the U.S. election is a turning point or an inflection point and some reason to buy gold. And I tell them, no, not really. It's not going to have any effect on the market or the trajectory of the debt or any of the issues that are truly important. The biggest issue we're facing right now is just what we've been talking about, debt and the cost of servicing that debt. How many times has that come up in either the Trump or Harris or Biden campaigns? Has it been
zero,
even asked by anyone or
zero.
answered or even mentioned? Zero, absolutely zero, not at all. Uh, it's not even on the radar screens. It's going to come absolutely out of left field for the political class. But I think the Fed's well aware of it, and I think that's why they're sweating right now.
So, Brian, we've made the case of why there should be strong demand for gold. What I don't think is as well understood by the bulls, the current mining investors, or the generalist investors, is how broken the supply chain is. Like,
Yeah,
Economics 101 tells you that when the price goes up, supply goes up. But you've got the two biggest producers, or two of the top three, Barrick and Newmont, that are struggling to increase production. They're
yeah,
not replacing what they're mining. Now, of course, they're making lot of money at
yeah.
current.
They live. It's a it's the same as it is throughout the financial universe. It's living quarter by quarter, making your financial goals quarter by quarter, and not looking, which you have to in this industry, 10, 20 years down the road for resource reserve replacement, and therefore a production curve that will grow over the future. When you look at Barrick's production curve, I mean, it's a declining line, or flat to declining over 2 decades. And
Well, and
so
if
the
you actually combine Newmont and Newcrest, who
yeah,
are now one unit, if you looked at them individually, they were in this, Newmont was in the same boat. Uh,
yeah,
Just because you move mines into one entity, it doesn't
yeah,
mean that those two entities that are now one are going to produce more gold.
right. Because exactly. So from two separate rows on the spreadsheet, they go into one row, but the total production
Doesn't,
remains this or lower
or
because they're rationalizing a lot of those assets, but they're not looking down the road. And gold's a bit easier than copper. You have to look 15, 20, 25 years if you miss a cycle for copper production. A copper mine to go into production, you can get under a decade for gold from discovery to production. But still, we are at, if we aren't at peak gold, we're at level, we aren't growing much at all if we are. Now,
it's pretty much topped out.
yeah. Now
Now it
gold,
gets,
yeah, and gold's unique among all commodities in that it's not consumed, and you can have supplies go back in the market, and we saw that in 1980 with scrap supplies and everything else. But my view has always been that the issue for gold is monetary demand. And that can, at times, in times like we are facing now and over the next 5 years or so, those kinds of times, the monetary demand will overwhelm any other factor out there. And,
and
same for silver.
and you look at the Chinese, the Indians, the new buyers, the central bankers, they're all hoarding gold. They're not, paper can, paper markets can play around, but the
Yeah.
physical supply is being hoarded.
Yeah. It's strong buyers, price insensitive buyers. And this is, I hate to say it, it's dangerous always to say it in investing, but it is different this time. We have central banks buying. We really have not seen that for
Well,
over a
it's
century.
it's different in the context of 50 years, but it's not different in the context of 200 years or 300 years
Mhm.
or hundreds of
Yeah,
years.
well, we had central banks obviously buying in the 1800s, but things shifted in the early 20th century to where they didn't sell, but that we didn't have big gold discoveries where they were required to buy it, et cetera, et cetera. It's not that isn't really the unique aspect of it. What's unique is the rate of central bank buying as the price is rising, and the fact that Chinese investors and savers were buying on the way up earlier this year.
And
Now
hoarding it. They're not
yeah, and
selling.
hoarding it. And they're not buying as eagerly as they were, but they
Neither are
are,
the Indians, but they're holding on to it for dear life. Hodl.
and they are fulfilling their traditional role of buying on declines, which helps support the price gains. But Western investors didn't start coming in till the end of the summer.
2 months ago.
Yeah, and their ticket to the party was already $400 higher than when they should have joined the party earlier this year.
And I don't think that if you, it doesn't just stop at the supply chain being broken from evidence of the two major the two of the top three. Agnico Eagle is a separate, they're an awesome
Yeah,
operator. They do every metric correctly. But then you look at the developers, and there's not enough in the development stages to replace the old mines. And on the exploration success, the important discoveries on exploration that can then move into development, there's not enough of those. So the
Yeah.
supply chain is staying broken for decades.
Yeah, and one of the things that's going to happen increasingly, and we're already seeing signs of it with this rise in the gold price, is that governments, when they see mining companies making that much money, they, do one of three things. They renegotiate or repudiate, nationalize, or they just completely say, "Oh, we can mine it better than you can." Uh,
Have a
this is
shot at her,
this is already starting, and we've seen it in a couple of situations in West Africa.
Panama.
Uh, Too much reality yet, but some noise, political noise, rhetoric out there, and it's going to happen. We've seen it all the time, and so that is a natural cyclical restraint on gold production. When prices are high, production can drop as countries and profits or mining companies can drop. So I think there is and will always be a premium for North American projects.
Speaking of a broken supply chain, silver just blows me away, Brian.
Hmm.
Silver is already in a deficit. It is a monetary metal. It's being consumed like crazy for solar panels. The demand is stronger than the supply by about 20% of the physical production. And yet the paper shorts are massive. I mean, I think silver is ready for an explosive move.
Yeah, and it seems like it's on the launch pad or just clearing it as we speak. I've always been a big skeptic, and I think perhaps the only skeptic at times about industrial demand for silver. I've always thought it has been more of a detriment than an advantage because when you have signs of an economic slowdown in the US or China, the analysts have used that industrial demand component as a stick to beat silver up with, and the silver price has dropped. Uh, the the industrial usage for silver has always been absolutely overwhelmed by the monetary aspect of silver. I think that silver would trade for, maybe $5 an ounce if it wasn't for the monetary demand for the metal. All that said, if you take a fraction of the projected solar use for silver, which I think you do have to take a fraction because I think it's wildly overstated. If you look at silver usage and new battery technology coming out, et cetera, all of that combined by 2030 could take up all newly mined supply of silver.
Exactly.
So it is a wild and crazy market compared to gold, and it has always outperformed gold in a long-term monetarily based bull market. And I think it's going to do so again.
And that just to catch up, that means that we see over $50 an ounce silver.
Yeah, that's the target. I think that's in the cards. Obviously silver has done that a couple of times. I think we'll beat it on this next run. I think we'll beat it by a multiple on this ultimate run. But yeah, silver has shown that it has the crosshairs on $50. And if you recognize that you want to be in silver and you want to be in, because silver offers natural leverage to gold, the silver
Yes.
producers,
Even
developers,
more leverage.
explorers offer leverage on top of silver. So you can really turbocharge your metals and mining portfolio by having significant positions in the silver juniors right now.
And there's not that many great ones to talk about, Brian. That's the
No, there really aren't. I was looking at a performance table today, with some anxiety because I want to own them all, but I do own a few. And I was looking at the year-to-date gains, and doubles and triples already, but there's what, two handfuls or maybe 15 of really well-positioned silver players right now.
Well, I
Uh,
feel very fortunate because recently I brought on Vizsla Silver as a sponsor.
yeah,
I
yeah,
think that this company is going to
I'll lay
grow
down.
into.
Barring some geopolitical issue, it is a laydown. It is has. I mean, you just look at. God, I'm knocking on wood when I say that because I don't want to jinx it. But if you look at every aspect, and they are still just scratching the surface of Panuco.
And
They
they're
they should they should take carve out what they've already found at Panuco
spin it
and
up.
then put vend out the rest into a new vehicle.
You never know.
Exploration
These are
vehicle.
smart guys running that company. And, some of the geopolitical stuff is a little bit over. I live in Mexico, Brian, so I got a ear to the ground.
Yeah,
And I think that the chances of them not mining silver from underground deposits is zero,
yeah,
absolutely
right.
zero. And Panuco benefits from being high grade gold and silver. And, if you look at the sensitivity to prices, they already started out at a base case of 85% IRR with
Yeah,
lower silver and gold prices. If you use current silver and gold prices, that thing is producing silver on average with an IRR of triple digits.
yeah.
That's
And
unheard
I
of here.
recognize it's been on a bit of a run. I don't know what the exact numbers are. I'm just enjoying it, wishing I had more. But before this latest run in the metals, just along the development pipeline,
Yes,
the argument was for a five bagger. Uh, and it's so solid in terms of the economics and metallurgy and grade
everything.
and potential of the projects it has that it has been my top silver recommendation for the last couple of years, especially when I have to go out of the junior market into broader mainstream investments where you have to recommend something with a larger market cap. Uh, it's been
I
one that I can't get hurt on. I don't think I can get hurt on, in other words.
I've been very bullish on Agnico Eagle and Alamos Gold because of
Mhm.
how great they are at operators. I
Yeah.
think Vizsla is going to be the silver version of Alamos and Agnico in the future.
Yeah. Remember when they were in the depths of the recent post-COVID bear market. They were running 8 rigs on that project, and they had a $40 million balloon payment and no way and nothing in the bank to make it facing them. And that took some cojones in that kind of a market. But when you're turning up kilogram level intersections over 5 to 10 meters, just keep making more. And eventually the market's going to recognize that.
And it's, Brian, to think of a $200 million capex that can be paid back in like 7 to 10 months. Like,
Yeah, yeah,
this is well within the reach of a junior.
yeah. Well, that junior especially,
Yes,
and
absolutely.
and yeah, it's scoop it out of the ground stuff. It's a tremendous project, and there are a lot of projects. It hasn't come to bear in silver yet, but a couple of months ago, I was screaming, uh, to the market that $25 gold changes everything. Then I had to slash it out and say $26 gold change, and now
Silver.
$2,700 changes
Oh,
everything.
27. Okay, okay.
Yeah. Every one at these prices, every one of those optionality projects that sat on out of the money resources in the ground, needing higher gold prices, every one of those is not only economic, it's wildly economic and feasible. And they have not been re-rated by the market because this rise in gold has been so stunning and confusing in its initial stages the market hasn't had time to re-rate it. If you want to look at laydowns at when in this inefficient market, it hands you an opportunity that is so patently obvious. That's one of the areas I think you can buy gold resources in the ground for under $10 an ounce.
That's nuts. That's
Yeah.
nuts.
And in a normal market, not this kind of a market, just a normal market, those kinds of resources have traded for $100 to $150 an ounce in the ground when the project's been taken over by a major.
So just on average, that makes the
Just on
argument that
average. Yeah.
multi-bagger potential
Yeah.
in quality, high quality projects. And I
Yep.
guess that's a perfect segue into promoting your conference that's coming up in November. This is a really special one because it's the 50th anniversary, Brien. You must have
Yeah.
been involved when you were like 3 years old or something like
About this tall. Yeah.
that.
No, I've only been involved in the conference for 39 of those
Okay.
years. So I missed the first few. Yeah, it's special because it's our 50th anniversary. And it's even more special because it's coming in the early stages of a secular bull market in metals and miners. And if there's anything that we've learned from history over the decades, it's that you want to be in New Orleans at this kind of a moment. Forget all the 50th anniversary celebrations and the like. So, for the 50th, I was looking, okay, what big name speaker can I bring in? Then I looked at our roster of the people who I think are the smartest in the industry, and realizing I would be doing a real disservice of them if I got some vacuous, empty suit political name or, to come be a speaker when I could have Jim Grant, George Gammon, Rick Rule, Danielle DiMartino Boo, Brent Johnson, Jim Iorio, Peter Bookvar, Jim Bianco, James Lavish, Adrian Day, and the list goes on and on. I've got Tavi Costa and Lynn Alden providing exclusive content remotely for the event because they weren't able to travel but wanted to be part of this big 50th anniversary celebration. So we've got the top experts coming in to analyze macro geopolitics, every asset sector, metals and miners, the best in the business, great panels. It's just something that I think any serious investor has to really look at themselves and say, how can I afford to miss this opportunity when the metals and the miners are just taking off like this?
And really we joked around earlier about being great minds thinking alike. I appreciate that, by the way, Brien. You're someone I've followed for many, many years. But the topics we talked about today will be reinforced with statistics and charts and commentary from these people that you've put together for your conference.
Yeah, it will, I think, we differ, a lot of these speakers differ on the margins, here and there. Uh, Brent Johnson, of his milkshake theory, is someone that I brought in as a contrarian years ago because I thought he made a good argument that I didn't agree with. Well, now I pretty much agree with him. You have to challenge your premises. But he's a big gold bull too, so it wasn't that, you know, far of a bridge to cross. But they will present the big picture. They'll present their time-tested strategies. You have people like Rick who are great on that, and they're going to give you their top picks, their top recommendations in the sector. A lot of them, these speakers save their best picks and their best strategies for this event. They put in a lot of time and effort because they know that this conference is unique in the industry. It's the longest running investment event in the world. This is just not metals and mining or anything like that. There's nothing that has lasted as long, that has made as much money for as many people as this event. And I think this is going to be one of our best ever because not only of the speakers, but also this exciting situation in the markets.
I'm going to give people a little bit of inside baseball on being a stock picker and a market commentator. Back in the 2006 to 2012, I was a
Hmm.
regular guest on BNN. And what I
Yep.
quickly learned, Brian, was that the way that I got a bigger audience for my reports was being accurate and making timely picks. And that I did pretty good at it. They kept on
Hmm.
inviting me back. And what you just described there is sort of the same thing for these speakers. They want to come up with great timely picks because they know there's a big audience out there that is following what they're saying. So they want to get that marquee picks
Yeah.
out there as well.
Yeah, that's a great point, Alan, that I think a number of people miss. I love the speaker roster because over the 39 years that I've been in the business, I've heard everybody, I've heard everything. I've heard very smart people come up and expound and make very logical arguments that turned out to be way wrong. And a few of them that were way right and very timely. So if I have, after all that experience, one talent or ability that I'm not shy in talking about, it's being able to uh, uh, separate the wheat from the chaff, to know who is really good, who has views that are sound and worth listening to, whether I believe in them or not. And there are people who are very big names at other big conferences. And, maybe I tried to get them and we're not able to get them, but I'm looking at the roster right now and I can't think of anybody that I tried to get this year that I couldn't get from a macroeconomic and markets perspective. There are some that have spoken to at my conference in the past that aren't on this list because I don't think they delivered the value. And that's my marketing plan. That's my business model for this event. You have to be smart to come to this event because you're going to spend money to go to it. You're a sophisticated investor and you recognize quality. So I just try to pile value on top of value on top of value until the argument about whether to attend becomes, obvious and unassailable. And that I think is what we have. We have a money back guarantee. If you're not satisfied for any reason, we don't care. You're not satisfied, we'll give you your registration feedback. And it's
Brian,
testament to
I
our
don't know
audience.
how your time's doing, but
I'm doing
I
great.
did. You okay? I had a
Yeah,
couple
I'm
more
fine.
questions for you.
Yeah, I'm
So
fine. It's fun.
again, I think that there's an inherent, everybody talks about bias, Brian, and no matter what somebody does in any subject, everybody has a bias. The one being they want to be right. That's your biggest bias. And
Yeah.
the reason that your speakers want to be right is because it elevates their position or their platform. So I'm never I'm never a worry about bias. I know people that have an opinion on something, they want to be right.
Hmm.
It's my job to decide if I think they're going to be right or not. So bias never bothers me. But what I did want to close on, Brian, is I'm a treasure hunting junkie. And
Yeah.
I love the search for buried treasures and the mining of those buried treasures when you find one. And you put together a pretty good roster of companies, and some of them I follow. Do you mind if we talk about some of those that I'm aware
Oh,
of?
absolutely. No problem. There's so
Okay.
many companies I can't follow or don't have an opinion on every one, but it is a spectacular roster. We'll have uh, probably 80 to 90 of the best junior mining companies at this conference. So it is the best one-stop shop, I think, out there in the markets. It's perfect. It's not too many, but it's not too few.
Well, I follow some of them. And I know that, and I do my homework on all of them.
Yeah.
So let's talk about some of those. One of them is Coppernico Metals. This is a
Yep.
brand new company that's only been trading for a couple of months. It's run by a serial mining entrepreneur in Ivan Bebek, and
Hmm.
he's been toiling away down there in Peru on a project called Sombrero for a number of years. There's been kind of a sea change in the attitude towards mining in Peru over the last year or so. And so he's got his permits now. I've always been a big fan of Peru because I made some great picks in Peru over the years, but I was kind of saddened with the trend in politics in the country. I think
Yeah.
they've turned the corner on that.
Yeah,
And
that's what
now,
slowed him down. Ivan with Sombrero for a number of years, and Ivan's not one to sit idle for. And I know it's been bothering him, but now it's ready to go. He's very excited about that, and he is, if he's in the top three or four best promoters in the business, because he's so successful, because people listen to him, because of that success and that track record, but also he can spin a tale with the best of them. And, in his past ventures, I've made money on three of his past successes, one after another, good money. And two things I've noticed about them, well, besides they've always made money, they've never been the cheapest out there because Ivan promotes very well. They've never been the cheapest, but they've always done multiples of
well, this
at
time the
Ivan
lottery,
Gate.
this time
This
the
is
lot,
this one is cheap. This one is
yeah,
cheap because of that long delay. The other
yes.
thing I've noticed is when Ivan goes out on a road show for a company, it should be a material event because the share price is going to rise. I hide my checkbook when I run into Ivan. He is so good. But yeah, it's a great company, and they are kind of making their debut at our event this year.
Well, I've known Ivan for a long time, and one thing that he is including being good at presenting a company, is he's also, and he has that reflex that makes you want to cut a check. The
Yeah, exactly, exactly.
the other one is he looks for big things, not small things. And in
Yeah.
their Sombrero project, it has the geological similarities to another important mine called Las Bambas.
Hmm.
And something that Ivan is a bit of he comes from, he's been in the business for 25 years. So 25 years ago, Brien, not a lot of companies would sort of share their early drill results before assay results are out. I'm glad to see that that trend is changing. I think to bring the audience into exploration, the process, I think you need to keep people well updated, show them the drill core, and talk about that. And then when the assay results come out, keep talking about that. But I wanted to put it into the context of where Ivan has been and where he is now. He is from that school that, they usually held on to that drill core data until they saw assays. Recently, he came out with a news release talking about what we call in the business the smoke in the hole.
Hmm.
And if he's seeing smoke in the hole, he wants to tell that story because it proves his thesis, and he's obviously got some confidence there that, the assay results are going to come out pretty good.
Yeah, I'm a little nervous on that kind of approach, though, because sometimes you're robbing market response from the future, and bringing it into the present. And you never know, until the assays come out. So managing expectations is a big part of the junior mining game, as you well know.
Yes.
And sometimes it's great to surprise them too.
Well, in this day and age, I think that nobody's paying attention, so you kind of got to
Yeah, that's
bang
true
the
too.
bang the
Yeah.
drum a little bit and doing that. But for that, For Ivan to do that speaks volumes compared to every other House Street stock promoter doing it.
Because he's well aware of the managed expectations, uh, value of doing that and the danger of doing so and proving to be wrong. So yeah, I would trust that in Ivan's hands much more than I would trust it in just about anybody else's.
That's the point that I think
Yeah,
I was trying to make. Another, I guess, you have is Heliostar. Um,
yeah.
Now, Heliostar is a company that I've kind of followed. Actually, I have a long history. Red Star, which was the predecessor of Heliostar, Heliostar was involved with the project that Red Star had up in Alaska that I
Unga,
was
yeah,
involved in funding to get it into Red Star. So it's been in my heart for a long time, this
yeah.
Heliostar. And they struggled in Alaska because some permitting issues and other issues. It's
In
costly,
continuity, we still have 400 to 500,000 ounces at plus 10 grams per ton.
but getting 2 million is it's going to take a lot of drilling, and you're
Exactly.
limited by the season and all these other issues. So they decided that okay, let's look at Mexico because Charles Funk, the guy who runs it, he was involved with the company we talked about earlier, Vizsla, and the success that they've had. And so he's very knowledgeable about Mexico. And they got a project that at a very good time. They basically got a project that was um, misguided, if you will. I I know that some will take exception to that, but they were trying to make it into an open pit. And Charles and his team realized that there's a core high grade portion of that they should focus on making it an underground mine. And boy, have they ever proved their thesis up with drilling.
Yeah, the idea there was that the other owners wanted to go for large uh, open pit, but their recoveries were only about 70%. And, so Charles and his team looked at it and said, well, what if we just take out that really ultra high grade core, which will reduce the number of ounces, obviously, but at those grades, you could accept that penalty of a
Cash
70%.
flow, baby, cash
And
flow.
then, you know, and maybe you can improve the recoveries and maybe you can find more high grade. What's happened is that those maybes have actually come true. All the surprises have been good. They improved the recoveries. They found more of the high grade in the existing zone. Then they found a parallel zone. And you can tell me, but they came out with more great drill results this morning.
Morning.
And I haven't had a time to even look at them. I was so
Yeah,
eager to get this
they're
call.
expanding they're increasing the depth by about
The main zone.
150 meters of high
Were
grade.
they for the parallel zone too, or did they have any
Yeah, they're
result?
talking about the parallel zone too.
Yeah.
It's a phenomenal project.
Yeah, and not to take away any credit from them, but they looked at that. Well, I don't know if they were approached with Ana Paula or they found it or what, but Ana Paula was one of them. Then they got another big deal for another property package that they were able to acquire. So very aggressive management, smart management, and not afraid to say what they have. It really is an analog to Ivan and his uh, track record of success at an earlier stage, I believe.
And Charles is a brilliant guy. He's a
Brilliant guy, great guy.
sharp geologist.
Yeah,
Okay, let me run down a couple more names that I know that are going to be there. Dryden Gold.
yeah,
Dryden's it's like Red Lake 2.0, but it's probably like 50 years behind in drilling. And now they've acquired a big land package. And these orogenic gold systems they're challenging, Brian.
mhm.
But when you find the guts of them, they're phenomenal. That's
Yeah,
what made Red Lake Gold or Gold Corp.
Yeah, and let me know if you agree with my assessment of Dryden. I liked the land package. The history of it is very high grade gold. In the old days, they'd hit this high grade lenses and they would just go mine them. So you have, some very high grade, fairly small historic production, and they never really had a geological understanding, were never able to tie it together along the trend, et cetera.
And
And
to depth.
even, as I was talking to Trey and Mara a year ago about this, uh, I was having a hard time trying to put it all together, and I've been on the fence about it. I recently had a very in-depth discussion of Mara about it, and it looks like they are, you know, unlocking the code, as it were. And they've got some money and they're doing some drilling. And I think, I put it to her that this was seemed to be an inflection point for the company right
You
now.
described that perfectly. This is a project that you have to understand the DNA.
Yeah.
And when you do, it can be magical. For example, at the Red Lake mine, Goldcorp was mining that for like 20 years, uh, sort of moderately successful to almost a failure. Then they figured out the depth potential. They drilled down to 1,000 meters. They hit the bonanza grade portion of an orogenic gold system, and the rest was history. It continued for another 1,500 meters below that.
Hmm.
So figuring out these systems is really, really important. And the company has, in someone like Mora, she at one time was running a 90-person team exploring the Red Lake mine to add ounces
Yeah.
and add profitable ounces. So I believe you're right about the inflection point. They're starting to tag some stuff that the market is giving them some credit for, but I don't think they really think that they've cracked the code yet. You got a great code cracker in Mora, and I think they have started to crack the code, Brian. And so when you described it as an inflection point, I think that's a perfect analogy and that they needed to crack that code. And I see signs in the drilling that they are cracking that code.
Yep. Yep. It is one of those ones that I have been on the fence on, frankly, for a recommendation in Gold Newsletter. But literally over the past few weeks, I've been really warming up to.
You should. Emperor Metals will also be there. There's another really
Yeah.
smart geologist running that company. And they are in the Abitibi Greenstone Belt. They're also looking for orogenic gold systems. And they got a really sharp dude there running the company that I think he's cracking the code to what they have on their project on the Abitibi Gold Belt.
Yeah, I've followed John Florik's career for a while, and he's using AI to analyze what they have there. Again, sporadic high grade results. You're looking at not ultra high grade, but a high grade underground deposit. You have to understand the system, you have to connect it. And he's using AI to try and project these zones, looks like with some success, but also realizing, going to reverse really, when you look at the Heliostar example, he's finding a low grade operation or open pit operation in the midst of what had been a high only a high grade
But it's
project.
you got to be careful when you call things low grade
It's
because
all relative.
sometimes
Yeah.
a low grade deposit can actually be a high grade. And
Yeah.
he has one of those kind of low grade that are high for a low grade deposit.
Yeah.
And being
Yeah.
where it is so close to infrastructure, it would be a money making machine.
Yeah. It's like half a gram per ton doesn't make it around the world, but Nevada, it'll make it. Yeah. It's
Make
all
it.
relative to where
It
you
makes
are in
it
your.
a cash machine
Hmm.
in Nevada.
You're
And he's
correct.
kind of in the Canada version of Nevada.
Yeah.
So following on this trend, and I hope people recognize this, we've talked about a few companies and they all have exceptionally talented people involved and they're at the conference. Here's another one, Kenorland.
Yeah,
Kenorland, they are a prospect generator, but in their Zach Flood, he is a, you know what he reminds me of, Brian? He
his
reminds me,
dad.
what's that?
His dad.
Well, his dad was more on the market side of things,
Yeah,
but he's a
exactly. Yeah.
geo. You know who he reminds me of is Andre Goumand from
Okay. Yeah.
Virginia Gold.
Hmm.
And Andre made four companies and taken out and made his shareholders a lot of money. And I see a lot of Andre Goumand in Zach Flood.
Yeah, there's very few things that everybody, just about everybody, or all the smart people in the market agree on. And one is that Zach's, the cream of the crop and how talented he is. I had a conversation with him, I guess a few months now at Rick's event. And it's another company that's on my short list for Gold Newsletter. Um, and I was surprised, frankly, at how, given the high regard that Zach and Kenorland are held in the market, really it's not that expensive with what they have going on and how much money they're putting in the ground and what they're doing. And they're a big believer in the Dryden Gold story, at least broadly speaking. They usually option out projects. They optioned a big chunk of ground just to the south of Dryden Gold.
And they're keeping it for themselves.
Yeah, right. And that's another key point, that these prospect generators, every now and then, they keep a project for themselves. And
And
that's when you pay attention.
so here's all the analogy or the similar parallels between Andre.
Yeah.
Andre's big success as a prospect generator was when he kept Eleanor and found a
Hmm.
mine and sold it.
Yeah.
And another thing is, Andre was very good at geology, brilliant mind. He consumed data like nobody's business. He has a data set that's incredible, and Zach is following that parallel, and he was very good at telling his story. And he was a relentless promoter of what he was doing. He was at every conference all the time. And maybe Zach is not as good at telling the story as Andre. That's not a, by the way, folks, that's not a negative thing because Andre was one of the best ever. So,
Hmm.
but as far as the business end of things and the geology end of things, and keeping that Dryden area project to themselves, I see a lot of parallels with Andre Goumand and Zach Flood.
Yeah, that is a comparison that I think Zach would be very appreciative of you making.
I'll have to send my bill to him.
There you go.
Silvercrest is also at the. Now, Silvercrest has been a great pick in my reports, Brian, because I picked them when they were transitioning from development into production. And
Right.
since they just done a phenomenal job, they built a mine on schedule, on budget during the COVID era and the inflation era, which is no small feat in its own, but it speaks to the quality of their project. It's a money-making machine. It's got a low cost of production, high grade, and that's why they're being bought up by Core Mining. And I mean, just for example, they started out owing 100 million to bring it into production. In a few short quarters of full commercial production, they paid off all the debt and now they have $158 million in cash,
Oh, no, no, no.
cash and gold and silver.
Yes, cash and bullion. And that's great summation of what happened with them. Chris Ritchie over there kind of spearheaded the effort to put a lot of their cash into metals, did a lot of research into why historically companies would, especially mining companies, would have been much better off doing that, and why really any industrial company, if they have a big cash balance, should put it and hold it in metals. They were the ultimate silver and gold bug company. They had great success. They were proud of being such a great silver producer and a silver producer. And they're being bought by a company that all those strengths just perfectly fit all of that acquiring company's weaknesses.
Yes.
You know, high debt, kind of embarrassed to be a silver producer, all of the above.
So now they
And
pay down the debt, they get the cash, they
it,
increase their production, they bring down their cost of production.
yeah, it is a great acquisition by Core. I think it's a well-deserved payday by the Silvercrest team. I would not own Core going forward for this. So good on them for recognizing that and acquiring Silvercrest because it's just a monster. Now, what they can do with, I don't know what's going to happen with the management team, but I would love to be in their next deal.
Well, this is interesting because I think your show will be the last opportunity for investors to come and talk to the management of Silvercrest
Yeah.
about their business plan. And I would go back to their exploration success led to development success, which led to a business plan that included mining very profitably, being a great operator, and this business plan of holding on to gold and silver production. Nobody's doing it.
Nobody's
Silvercrest is
doing it.
like,
And they were the evangelists for that as well. Yeah, one of the keys, as you know, in this market is getting in early on good deals with good people. So that's a prime advantage you can
well,
get coming to New Orleans.
I think your conference is an opportunity for company people, investors to go and listen to the Silvercrest people and all these other well-run companies to learn. You can learn a valuable lesson from the
Yeah,
success of Silvercrest. And the band is about to be broken up. Maybe they'll come back together, but the band is kind of being broken up. And this is the last concert for the band, is your conference. So
yeah,
go there and ask them questions and talk about their whole life cycle from exploration success through to production and being taken over. You learn some great lessons there.
yeah. Absolutely, absolutely. And it's where you get in on the next big thing, whatever it may be in the sector.
Brien, you've been very generous with your time. I planned on this being about an hour. It turned into an hour and 20 minutes, but we'll make sure to put in the notes below the companies we talked about and all that sort
Yeah.
of stuff. And I congratulate your conference on 50 years and give us a final pitch there of anything I missed that we should have talked about.
Yeah, I just, again, at this stage of the market, the stage of the new bull market in metals and mining, the fact that this 50th anniversary of the event, the speaker roster is beyond compare. You won't find another speaker roster like this at any other event out there. It's a lot of fun to be here of this caliber of fellow investors who are willing to share their ideas. You get to talk to these companies face to face. You really can't afford to miss this event at this time in the markets. And our room block with the hotel has officially expired. You can still get in, but you may not be able to if you wait much longer. So it's coming up quickly. So go to neworleansconference.com. I believe you have a link as well, Allan. Come on down. It's going to be a
I'm
lot of
going to
fun.
put that in the notes there. I'll put the link to the thing in the notes there of
Yeah.
this YouTube channel. Well, Brien, I know you're going to have a wonderful conference, and it's exciting times. We don't always being ahead of the herd kind of makes you have to understand things a bit ahead of the crowd. And you and I both put out a lot of content to try to keep people ahead of the crowd. You got this great opportunity at the at your conference. So for folks that want to be like smart money investors, you got to be ahead of the crowd. And so thanks a lot, Brien, for doing this show with me today.
Thanks, Alan. It was a great pleasure, and I look forward to the next opportunity. And New Orleans is coming up, so come on down.
All right. Sounds great, Brien. Thank you very much. Everybody, do your homework. These aren't buying and selling recommendations. Speak with your financial advisors and be aware that Brien and I are biased like anybody else that has an opinion on anything. We want to be right. And we haven't got all these gray hairs in this business from because we're wrong more often than we're right. So, but as always, past performance does not guarantee future returns. Do that homework. Have a great day, and we'll talk to you soon.